Oh, gracious, good morning to my Amber universe where we have our red, our blue, and our yellow teams. I hope you're tuning in. This is your recap video for your first decision, decision one. And this will not be as long as some of the others are because it was your first decision, and a lot of it is just swag, some wild guessing because you didn't have any reactions from the customers or the competitors. So without further ado, let us jump to where we are here is on biz485.com. You can see that up on the left. You go to here, and right away I put your first decision here. There's all kinds of other things you can see of previous universes, how to ace the sim and all that good stuff. And if you want to look at where you're going, you can look at some of these. I'm also going to post some final presentations that are just being finished from my last universe and a couple one before that. So you can see what a final presentation looks like and how you can reuse these graphics. So right away, go to these graphics, hit your own Amber decision, and you'll see that in this recap, the recap isn't just this video. It's looking through all these financials, figuring out what happened, running your ratios, looking at the competitors. And there's a huge amount of data here that you can use from your first decision. You'll be doing some of this yourself. A lot of these you can't find on your interface. You'll find market share and all kinds of cool stuff. I made this a public company, all the companies, so you can see the other financials of your competitors, which will help you a lot. But it's really a lot of fun to guess. You can say, okay, where were their sliders based on what happened with their financials? And although this is a business writing and a strategy course, it's everything is obviously in business grounded on accounting, finance, and economics. So let's see, to start with, as we know, everybody really did well in terms of being so close. You'll see that it's like yellow, kind of blue, and red were split on these graphs, but they're almost identically close when you look at the numbers of one, although yellow did fantastic in terms of their return on capital employed. It's very rare to see in a first decision get into positive. Now you can call it rosé as the French do. You can see my hat. This is traditional. I wear my ROCE hat, or roque or rock. It's called rosé in French. And so there's basically return on capital employed. And that's a very important indicator, as well as EBIT, of course, and or EBIT and EBITDA, and of ARE, accumulated retained earnings. So, but to jump into positive territory, and when you look at these graphs, one thing to think about is this is, of course, EBIT eco-friendly. Where did they start period zero and where are we at now? It's not just where are you going in the trend, which is important, but also did you do better or worse than the way they left the company? So as you dive down, it's like, whoops, we did worse than the trend where they were going, which is straight, or we didn't, like yellow in low cost. This is eco-friendly actually, and this is the EBIT, and this is lost orders over inventory. So let me first jump to this, which is a summary. Now, this is kind of mysterious to you, and I let you kind of guess the sliders and guess the if you don't watch the video, you can kind of guess which car lines ended up where by the sliders and your competitive financials. But I get accused by the other instructors of giving too much information. Well, you won't see all this information on your interface, so you really should have all the information you need, like a public company would. So these are the four business units. They always go red, blue, and then yellow in terms of how they show on these reports, the sim, and then the sim always goes low cost family eco image. So this is your low cost, this is your family, this is your eco, and this is image. So it's traditionally your two cash cows are family here and our image. And usually we get ourselves destroyed by these two where we say, oh, I'm going to be the best, most eco-friendly. Oh, I'm going to really be the best at low cost. And you can see that blue didn't do bad in their investment in image, but got really destroyed in low cost. And destruction isn't as simple just as our EBIT dropped. What happened is, in the case of blue, is they did a great job of marketing, and you'll see in the key indicator in this whole sim is called lost orders over inventory. And you want to be on a zero line there because, and you can see this in the how do you beat the sim, the other link on this site, which is that you want that zero line to be straight. You want to be not have lost orders, which are on the bottom, and you not have excess inventory, which are on the top of the zero line. We'll take a look at that. But then you compare it to your EBIT, and you'll say between EBIT and that slide, you got the whole sim. You've got all the 6 indicators, the financials tied to that. It's really the key to the castle. When you compare those two, they're both on this site. Look at them both. Look at your EBIT by business unit, and then look at your LOI, your lost orders over inventory. Like any graph ratio, when it shows a graph, above and below zero, the bottom is the numerator, the top is the denominator. It's the other way around. It's opposite of what you think intuitively. So if it's lost orders over inventory, the lost orders are going to, when it goes down, and inventory is when it goes up. So when I say, okay, what's happening with low cost here? What happened with Blue? Blue got really fantastic revenues, as you'll see up here. They kind of beat everybody on revenues, did real well. But look at the EBIT. They had negative 23 compared to the 317 with yellow and 13. So what's happening? How can they have such destroyed EBIT with great revenues? When you're below break even in your production capabilities, two things happen. You didn't invest enough in CapEx, which you can't, you're just spitballing at the first decision, but now you can see what happened with CapEx, meaning your capacity to create these cars. So if you got a ton of orders, but your sales are way down there because you couldn't deliver these, that gap between orders and sales is your lost orders over inventory, and you're losing all those orders. So the lower you are in break even, the worse trouble you are when you have more revenues, because every extra sale is a loss, because you're below break even. So you're like, wow, I really knocked the ball out of the court in revenue, but my EBIT is worse than anybody else because I didn't have the production capacity to deliver, and I was not balancing EBIT with market share. Now, you'll see these two are tied, red and blue are tied, and it's not like they did the same thing. It's completely opposite issues and problems. In red, when you look and see in terms of current cash, this is a trigger when you see either 19,000 or 1899. Those are trick numbers to tell you a secret. The secret is if you look below here, they were forced to take a government loan. What happened is red ran out of cash because of expending. You'll see where they spent a lot on quality and a lot on HR and other areas as we look into the financials. But whenever you see this trick number, 19,000 or 1899, you can look at the number below and say, wait a minute. Coach T said all of us borrow 2,000. How do we borrow 3,000? Well, 1167 or 11 million. The units are euros, but they're millions. So anyway, what you look at is, hey, we had to take a government loan because we ran out of money. And that's why I ask everybody to take the 2,000. Now, you don't have to take from now on, do whatever you want with the loans. That was just so the sim doesn't crash and say, sorry, one team's out. So you'll be fine now because you'll be getting revenues, you'll be using those up, and you can run this at a loss. And the reason, oh, by the way, you're going to hear noises here. That's my dog. My dog is snoring back there, which means I got to throw something at her and wake her up. And you're going to hear my parrots, my daughter. This is Sunday morning, so there's going to be a lot of activity. So if you hear lots of background noises, I apologize, but hey, it's Sunday. So as we look forward, then we see that Blue had a real problem with low cost. Everyone usually does well here, although red did less well than you'd think, because I warned on a lot of these videos, free things and posting, and everybody still does it. You have to be very careful low cost and eco because they can really bite you, and they bit all the teams here. Yellow, not as much. So you can see yellow did invest more in image as a cash cow and waited till a little later. But some of these numbers are just so much bigger. If you look at HR and quality, the predecessors we got were like 100, 120. Red invested like 1,000, which you have to be careful of with the sim. It's very sensitive. It's like flying a jet or a helicopter. Micro movements, little changes. Don't go, wow, wow, you're going to be upside down. That's what happened. 1,000, a million, 1,000 euros, 1,000 Bitcoins, whatever, compared to 100 is a huge jump. And that's the problem with HR and quality is that You can't throw money at salaries if you're not getting good revenues, because HR and the vision of the employees got to do with your success, EBIT and revenue. And that's tied to that because they're happy and they like working for a successful company as well as making more money. But there are real world things here that have been lots of studies have gone into, which is be very careful. If you can only put so much money into salary, and then the employees start leaving because they don't like the fact that there's too many repairs coming in, that the factory's not been kept up with depreciation. You can't throw money at the problem. Same thing with ecology. You can say, I'm going to do all eco and I'm going to get so much revenue and so many fees. I'm going to price this so low. I'm going to just destroy the eco other competitors and I'm going to be the best. And all of a sudden you see you have the worst emissions. It's like, what? I've got the eco car. How can I have terrible emissions? Because if you put 1 billion cars out there and their image that's a gas guzzler has 100, you're putting out a lot more image based on volume, not just on the units. So it's good to benchmark and look at unit costs, but be careful about also the big picture in terms of what's happening. So that's a comparison of low cost and family. Let's see if we can jump over to the lost orders over inventory just to show you how it works. So this is the eco-friendly, where we saw that everybody kind of took a bath on eco-friendly. So, but some were worse than others. And this is a great example of how to look at LOI, because red team, what's below the zero line? Below the zero line, it's the opposite, is it's lost orders over inventory. So blue had a huge amount of sales and did really well, as we saw in the EBIT, and yet they got destroyed in LOI because they have a ton of lost orders because they didn't put enough capacity for all that revenue and all those orders. So the gap between orders and sales, and when you say sales in Europe, sales is deliveries, because I mean in America, because when we book a sale, we book it when it's delivered. You know, it's a little different in other countries, but right here we have to say, hey, sales are delivered, and if our sales our deliveries are much lower than our orders, then we have a ton of lost orders. So that's going to drive all of the numbers down. It's going to invest a lot in marketing engineering that gets wasted, and then it eats up our cash. LOI destroys all 6 of our big 6 indicators, all the way from ARE to ROAS to EBIT. And you'll see that as you go along with these decisions. Yellow, who did fantastic because they actually came out with a positive ROAS, which I've never seen. I mean, I'm talking to our other 30 instructors. It's like, what? Are you kidding? Positive ROAS on the first decision? What do they guess? It's like, no, this is not just luck. It's very important because the way that they invested is they were careful in low cost and eco, and yet they hit a little bit of a jackpot, not even, of course, totally, but in family and image. So that's what we kept kind of advising you before the first decision and all the videos. Be careful not to get burned on low cost and eco. And everybody got burned on eco, which is we all have good hearts. You know, we're trying to save the planet and get blessings and all that good stuff, but we still have to come across and save the company first, put on our own oxygen mask first. So yellow did great in terms of staying near zero. You have to get as close as you can to the zero line. Everybody had inventory up here, so nobody's like straight across here. Nobody can possibly be at zero line by balancing production and demand, because you don't know demand and you don't know production yet. So if you're looking at who's like closest to zero, it's going to be deceptive because it shows what's the trend from the starting point, not from zero. So this is where what you inherited. You inherited a broken company here. This is a turnaround. So they were not at zero to start. So what did you do? It's like, well, yellow was conservative and didn't do a lot, so they stayed the same. But now they've got to drop. They still have a ton of inventory, so they've got to get some sales going, but move both down at the same time by keeping the production up with their inventory and get them both down to zero. And you say to Blue, you did terrible. Look at that. You dived into all these lost orders. No, look where the zero line is. They're moving in the right direction. The trend, they just didn't stop, but you can't go, it's non-linear. But they did a great job of getting closer to zero by doing a lot of production in eco as well as getting the orders. So they got out of the territory of and you got to watch the scale too, because it goes on where the teams are at. So anyway, that's an important key issue to look at, comparing it to EBIT, and you'll see how it drives ROAS and EBIT and many of the others. So we looked at eco-friendly. We've got EBIT, what you looked at here, so you don't have to look at it here. But let's see if I can find some LO. Okay, these are our ROSs. And you can see this is where we got into positive territory with ROS because they did fantastic. They did really good in, if you look at the financials for yellow, it's like what drove it? How did they get into that positive territory? Yeah, and what I do is you don't have to put everybody into ratios, but take your own numbers and put them into a ratio cruncher, and you can see that the rows in yellow's rows in image was 12.4%, a fantastic return on capital. And so that investment in image really got balanced with their lost orders over inventory. So let's see if I can find that here. There's your family rows, return on capital employed. Here's LOI. Yeah, let's look at the LOI and low cost because you didn't start anywhere. All right, this was started closer to zero. So what happened is, and nobody built up a lot of inventory, but everybody had a lot of lost orders except for Blue. This is Blue's kind of saving grace is how they did it in low cost. Now, if you go back to EBIT and say, well, what happened in low cost? Because we know Blue had a big problem with in terms of their their EBIT with their EBIT kind of tanked because of not just loss overs over inventory or building inventory, but Blue had a problem with revenues above break even with EBIT, and that drove the problem with the lost orders. So part of this is just when you just leave the sliders where they were, you'll continue it. So it's not like we remade the investment, but if you did invest in marketing and engineering with the sliders and then didn't look at the other production side, you can stay close to the same. So our trends aren't bad in terms of lost orders compared to where they were, but you can't look at the trends from back here. The trends could be from here to here as you took it over. And it's not worth looking at the past and saying, it's better to look at the trends. So when we look at the trends and say, okay, where do all of the different teams go with LOI compared to, let's see if I can find, let's see, where's family and image? I think there was a lot of inventory built up in image. Oh, here we go. Let's look at, okay, here's one with where we're starting with a closer, this is more realistic for decision 2, 3, and 4. Is you're going to all you will be a lot closer to zero because you will balance your inventory and balance your production and balance your sales and marketing, backing off on the sliders where you're over investing money because you don't have the sales. So this is a really good example because image everybody did fairly well, but you can see that Blue, um, because of getting that high revenue, but within image, they got good EBIT. Everybody gets it because it's a fast growing segment which is already profitable compared to eco and low cost, which are your question mark and your stars. But you can see we got inventory building going on with the other two teams, including yellow. So, and yellow did really good financially in terms of EBIT in image, but they did, now this isn't a terrible build of inventory. I've seen it go like a rocket ship. So we're getting closer, but this is also a logarithmic problem in terms of not having enough decisions all at once. So you can go back in this site, and I'm not going to take the time to do that, but look at previous teams, 5 decisions, 6 or 8 decisions. Some are on ground school classes that have even 8 decisions. So you can look at some of these and see the actual sine curves of where it bounced around and ended up by the 5th decision. I guarantee by the 5th decision, you'll be expert at this. You'll be asking the right questions and be saying, we see what happened. So that's part of the learning here. And it's your return on investment, your ROI for taking this class, because it is real world simulations that you're showing. And as I said at the beginning, you can all put it on your CVs and resumes, and it can last. I did this 20, 30 years ago. You see, I'm old. Started with the Sims, and it has absolutely helped propel me to a CEO position and do fantastic. In fact, I was at GE Healthcare and I did the seminars among thousands of teams worldwide. All the executives came and competed for 2 weeks. We came in second. And when I get back, they had a little party and said, wow, we can't believe your team out of hundreds came in second. We're going to buy you an MBA full ride. So, I mean, that was kind of a nice reward in terms of quote, just doing a sim, but this is not just a sim. There are 255 versions on Harvard. On your CV and your resume, you can put, I intended GCU Harvard for the sim. you know, this is very high level stuff. And I always get questions from some of the more sweet, my humble, hardworking students going, what are you throwing us into something at Harvard for? You know, we shouldn't have to do this much kind of brain work. It's like, yeah, well, I've seen our GCU teams beat Harvard many, many times. Look at Yale. They got it early. Rose here. As you saw, if you watched the initial video, we saw our red team had incredible results never seen before, where they were number one in all 6 indicators. So again, I'm not going to take a huge amount of time to kind of say what happened with the financials, because you'll be getting that information in more videos, more posts, more memes all the rest of this week to help you with your second decision. And do watch the second decision videos. There's some really good ones. Our course lead, Paul Waterman, Professor Waterman, and I did a bunch of these videos kind of for the teams saying, hey, second decision is really important. You're feeling your oats, you're seeing what's happening, you're getting what's happening with the competitors, and you'll see lots more indicators here of what happened with the customers in terms of what was efficient, what happened with the learning curve, where were you, and don't just look at these curves for where they are, but look where they're going. Where's the trend? The secret to any kind of dynamic process is if you're behind the trend, you're going to be sucking exhaust. If you're going to, and ahead of it, you're going to be breathing just air and no fuel. If you're right on the trend and you meet it as it moves, you're going to, walk home with a bag of gold. It's just like putting money in the basement. Don't work really too bad about taking loans either. Leverage. I've seen a company, you guys are at what, the 30% or something in leverage? Not too bad, but right now because you haven't borrowed much, but don't worry about leverage if you're doing well on revenues. Below break even and below profit in one of the lines, it's like going bank up really quick to have a lot of leverage. But it's like printing money in the basement if you have, because of leverage, it multiplies above break even. And the trick of that is just in the accounting. It's that if we're above break even, what it says is that at the margin for every dollar of sales, we're beating the weighted average cost of capital. So I can go all day long and borrow, 9% money if I'm making 12% and arbitrage it. So I should borrow more and more and pay it back because I'm making 3%, 4% for doing nothing. You're growing value on the machine, on your flywheel that you've created. So, and the goal of this is to create a flywheel with EBIT compared to your revenues and your market share, and then driving your value for your customers. Now, I'm not saying a whole lot about what's really important to the planet and that with your ecology and keeping your employees and the sustainability part of this, because it's all tied to the financials. The truth is this sim is built really real world. And if you're not successful in turning it around, which nobody ever is, and we're talking to the sim creators in Belgium and France and Harvard saying, guys, come on, just start them out with in the tank ARE that they'll never get positive. At least boost it up so there's a chance. But everybody's on a balanced playing field because we all start at the exact same place, the exact same sliders. There's also things here to close the rest of this up. It shows you what they did in their sliders, the competitors, how the customers responded to the sliders. So there'll be more about that in expectations and explaining how the sliders work as we go forward. I could not do that. I could show you the videos and tell you, but until you see reactions like this and look at the financials, you can't correlate them. There's infinite number of possible associations. No human brain can do it, even with the help of AI. So run the ratios for your own team. Look at the other teams, but don't spend a lot of time on the other teams except strategically. Do your SWOT, do your SMART, do the things you're studying in the class, and use our Hit Ireland and our other texts that are showing you how do we look at competition and strategy, and then just apply them here in the sim. Vice versa, when you get assignments and papers, use these graphics. I'm giving them to you to use. It'll make the course a lot easier. And I also get questions, tons. I may as well answer them right now if you've been patient enough to watch all this. Everybody asks about the midterm. They're like, wait a minute, we've got to take this midterm. What do we do? Just like on the CCOB benchmark, the final for your capstone class that you took, it's only worth 25 points. And we get people that got 5 points and that got 24 points. It just shows how did you remember that? How well did you remember that? Uh, Debits increase assets. and they decrease liabilities, I mean, on credits, they'll throw that from the old accounting. If you slept through accounting and finance, this is a chance to wake up because the Sim's got a lot of finance and accounting, but a lot of the financials are done for you. So you get to your final presentation, you can use all these, and it's not if you win or use. Like I said, you can ace this class if you do good presentations and are honest. Oh, we started out really bad. We got a government loan. Look, we ended up number 1 or number 2 because we made these course corrections and we iterated and made these adjustments. So don't get discouraged. Keep on trying, and if you the tragedy is if you fall down and stay down, fall down and get up. That's what Mae West. It's not if you fall down, it's if you stay down. So get back up, get on the horse, and then there's 10 metaphors at once. But so anyway, that's kind of the parting sort of advice. And I'll be keep on looking at the announcements. There'll be more announcements about this as we go forward. Let's stop this screen sharing. Come to the site, take a look at the site, and go over the financial data. Any questions? If you want more financials, you want more ratios, I will help you. I got your back, and I will send them to you, and then I'll share them with the rest on the DQ answers and on the announcements and instructor ads. Just so you know, I don't help any one team. If someone asks a question, I answer, then I always post the answer so everyone can see it. Not everyone does, because not everyone looks because you're so busy. But again, on the finishing up on the midterm, you can see my stream, my chain of consciousness here. There's a lot of multiple choice on it, and at least 2 out of the 4 are just absolutely silly. So you can get it down to 2 and then flip the dice if you can't do it, or flip the coin if you can't figure it out. But you can usually eliminate 3 and get the 4th one, and at least get a 50% or 60% on it, even if you're real rusty on the financials and the accounting and that kind of stuff. So don't sweat the midterm. Don't spend a lot of time trying to study everything you've learned in 4 years here. Just take it, God bless, say a couple prayers, and then be real smart about reading the questions carefully. I find if you rush through it and you get tense, you can get a really low score on it because you missed something that was obviously really, really wrong. And there are some really, really wrong things in 3 answers. They didn't design this to make you fail. So you can still get it down to 2 and get it wrong, but you got, take a guess. It's weighted so that guesses don't hurt you, but they do help you if you get it right. That percent, that ratio's in there. So anyway, I really appreciate you taking the time to watch this, and we will continue to work on decision 2. Watch those videos also, as well as this recap, and you'll be in good shape by Friday, Saturday at noon at the latest, but hopefully on Friday, for my validator to say, okay, coach, it's ready to run the sim so you can make your video. Thank you, guys.